Hey all, welcome to ShareTrek. This is Raj here. What a day it was in the stock market today. I anxiously saw DNA raise and then fall back. Fortunately, it ended in the green. I always suspect insider selling will spike whenever the stock price rises. In this case, there is something very bullish, I think, happening in DNA, and we need to find out what it is because the share price has risen despite insider selling. If any of you know the answer, please share it with us in the comment section because I haven't been able to find the reason. Another thing that really intrigues me is that the technology sector and index movers were all in the red. That said, my main worry is what will happen to DNA, CRISPR Therapeutics, and other genomic stocks that remain positive today after a massive gain as yesterday, while all the index moving stocks, technology stocks, were in the red. Will they drop on Wednesday or will they continue to raise? That is the big question. This led me to focus on an article from CNBC and watch till the end, my friends, for my conclusions. And also put your comments in the comment section below so that I can understand where you're coming from and get some inputs from you as well. That said, let's get started. Welcome back, friends. Here is an article from CNBC that I was referring to. I put the link to it on the description so that you can read it. Here is my takeaway on the article. According to Bill Merz, who is the head of capital markets research at US Bank Wealth Management, even if the debt ceiling is raised, it could still disrupt the markets. This disruption would occur because the US Treasury would need to issue a significant amount of debt to replenish its general account. As a result, there would be a reduction in the liquidity in the broader capital markets. Merz also points out that this reduction in liquidity has recently been correlated with the performance of the S&P 500, which is a stock market index that measures the performance of 500 large companies listed on US stock exchanges. In other words, the decrease in liquidity resulting from the issuance of additional debt by the Treasury is likely to have an impact on the overall stock performance of S&P 500. And the article says that the investors are eagerly waiting for release of the minutes from the Federal Reserve's meeting held earlier in May. These minutes, which are scheduled to be released on Wednesday afternoon, will be closely observed by investors for insights into the economic situation and potential monetary policy decisions. And if you look at the way the article has been positioned, it has been positioned just below positive futures. So basically it implies that investors are thinking that there is going to be a favorable outcome coming from those discussions, those meeting minutes, that's going to keep the market in the high. Meanwhile, there is another factor playing out. Investors are eagerly waiting for the release of the minutes from the Federal Reserve's meeting held earlier in May. These minutes, which are scheduled to be released on Wednesday afternoon, will be closely observed by investors for insight into the economic situation and potential monetary policy decisions. And that's where there is a bit of optimism that is coming up, I think, which is keeping the indices green, because the decrease in liquidity resulting from the issuance of additional debt by the US Treasury, which is what will happen if the debt ceiling is resolved and increased, that is generally expected to have a negative impact on the performance of the S&P 500. When liquidity is reduced, it becomes more challenging for market participants to buy and sell securities, which can lead to increased volatility and potential lower trading volumes. This reduced liquidity can make it harder for investors to execute trades at desired prices, potentially leading to wider bid-ask spreads and increased transaction costs. In the context of S&P 500, a decrease in liquidity can make it more difficult for market participants to efficiently buy and sell the stocks that make up the index. This can contribute to increased price volatility and potentially lead to downward pressure on the overall performance of the index. However, it's important to note that the impact of reduced liquidity on S&P 500 can be influenced by various factors, and the relationship between liquidity and stock performance can be complex. Other factors such as economic conditions, investor sentiment, and specific market events can also influence the direction of the stock market. Therefore, while a decrease in liquidity is generally seen as having a negative impact, the overall performance of the S&P 500 is influenced by multiple factors and can vary in different circumstances. But now, having said that, coming back to headlines that say that the futures are looking positives, as investors await debt ceiling talks outcome seems misleading to me. If the debt ceiling is not raised, for example, I think we will have people losing jobs because the federal government employees will not get paid. they will have to go home. And if those kind of things happen, then the demand in the economy will fall down, and we will head into a recession. So that's not good for the stock market, and that's not good for the economy. So even if the debt ceiling is resolved, we are having a different kind of problem because liquidity is getting mopped up. So I think whatever happens to the debt ceiling, it's going to be a net negative for the economy and for the stock market. So I think we have to focus more on the monetary policy side to get some positive cues. And that's what probably is happening. And if the minutes of the meeting do not lead to the right amount of positive sentiment, friends, I think that all the bullishness that we have seen so far is going to be is going to dissipate. So now, having said all this is my interpretation. I think that I am as clueless as I started when I started looking for answers. So I don't know what's going to happen tomorrow. And I would like to know, what do you guys think? What's going to happen tomorrow? Are the leading genomic stocks, which were still in green today, despite index movers going in the red, will they continue to be green? And what is the cause for bullishness on DNA? If any of you have any information on these things, just put it in your theories also. Just put it in the comment section. It enriches the channel and the community, and maybe we'll get some better insight. So that's all for today, my friends. I'll catch up with you in the next video. Bye for now.